At this point in your journey, one thing should be clear. Consistent trading performance is not created by a single technique, a perfect entry, or a moment of willpower. It is built through a structured process. A process that develops over time, across many sessions, through preparation, awareness, regulation, and review. Throughout this course, you learn that trading psychology is not limited to what happens while you're in a trade. It begins before the session starts, continues during execution, and extends after the session ends. The same market setup can lead to very different outcomes depending on your emotional state, your preparation, and how well you manage yourself across the entire trading day. What connects all of these skills is structure. Without structure, awareness fades, reactions take over, and mistakes repeat. When there's no framework, each session feels isolated from the last, even when experience is accumulating. Structure is what turns separate tools into a system that actually supports consistency. Professional performance, in trading or in any high-pressure field, is built through intentional repetition and feedback. High performers do not rely on memory or emotion alone. They review how they prepared, how they reacted in real time, and how their internal state influenced execution. This is how experience becomes learning, instead of turning into wasted effort. Welcome back to the ComLucro channel. This video is the conclusion of our psychology mindset workout for traders. In this final session, we will bring together every psychological skill you trained and organize them into a complete trading psychology framework. By the end of this workout, you will see how preparation, awareness, regulation, and feedback form one continuous system that supports long-term consistency. If you enjoy this kind of content, make sure to like the video, subscribe, and turn on notifications so you do not miss what comes next. And let us know in the comments what topics you want us to cover next. You will also find links to our trusted partners in the description. When you use those links, you help support the channel and keep this content moving forward. With the full journey now in view, it becomes easier to understand how real learning actually takes place. Growth does not come from what happens inside a single trade, but from how each trading day is prepared, experienced, and processed afterward. The purpose of this framework is not to judge results or obsess over profit and loss, but to turn every session into structured feedback that supports long-term performance. The framework begins before the session even starts. Preparation and pre-trade awareness set the baseline for how you will perceive the market and yourself. By checking in with your emotional state and entering the session intentionally, you reduce the chance of unconscious reactions driving your decisions. During the session, awareness remains active. This is where impulse interruption, trigger awareness, and emotional calibration come into play. Instead of reacting automatically, you learn to notice emotional spikes, recognize triggers, and adjust intensity in real time. When necessary, you reset your state so one moment does not contaminate the rest of the session. After the session ends, the framework moves into processing and integration. The first step here is post-session awareness. Before reviewing numbers, you pause and observe your internal state. Calm, frustrated, relieved, mentally tired, or overstimulated. This moment captures emotional reality before it fades or becomes distorted. Next comes behavior reflection. Instead of focusing on outcomes, attention shifts to execution. You review how you acted, whether rules were respected, hesitation appeared, trades were forced, or exits were rushed. This step separates behavior from results. Behavior is within your control. Outcomes are not. As this process repeats across sessions, patterns begin to emerge. You start noticing consistent links between emotional states and execution. Certain mistakes appear after losses. Others show up after strong wins. Some behaviors surface when you feel rushed, distracted, or overly confident. Without a framework, these patterns stay invisible. With it, they become clear and workable. From those patterns, intentional adjustments are designed. Rather than changing everything at once, you select one small focus for the next sessions. Slowing down after losses, reducing size after winning streaks, increasing patience during low-quality conditions. This step transforms insight into action, not self-criticism. The framework closes through repetition and feedback. In the following sessions, you trade with awareness of the adjustment you defined. Then review again. Emotional residue is processed instead of carried forward. This completes the loop. Over time, these cycles compound. Sessions stop feeling isolated. Learning accelerates, and improvement becomes deliberate, measurable, and sustainable. When traders reach the end of a course like this, the real test is not what they understood intellectually, but what they carry forward into their daily routine. One of the clearest signs that a psychological framework is missing appears when sessions end and nothing is processed. The platform closes, emotions settle, and no reflection happens. What feels like moving on is often just carrying unresolved patterns into the next day. Another gap in a trader's framework shows up when performance is reduced to profit and loss alone. Days are labeled as good or bad based purely on outcome. What disappears in this process is behavior. A well-executed losing trade and an impulsive winning trade receive the same emotional conclusion. Over time, this disconnect quietly trains the wrong habits and hides the true source of inconsistency. A framework is also missing when mistakes repeat without clarity. The trader notices the same problems showing up again and again. Early exits, overtrading, hesitation after losses. Without structured awareness and review, these behaviors feel random. Strategy gets adjusted repeatedly, while the real drivers of execution remain untouched. Unprocessed emotional intensity is another clear signal. Strong wins or losses end a session with elevated emotion. When that state is not observed, regulated, or reviewed, it fades without being understood. The next session begins under the influence of the previous one. Losses create pressure to recover. Wins inflate confidence. Without a framework, yesterday quietly controls today. This is where a complete trading psychology framework changes everything. Instead of isolated sessions, the trader begins to experience continuity. Emotions turn into information. Behavior becomes observable. Each session connects to the next through preparation, awareness during execution, review, and intentional adjustment. That is why journaling and feedback loops are not tools on their own. They are pillars inside a larger system. A system that transforms experience into learning, repetition into refinement, and effort into long-term consistency. Without a framework, progress remains accidental. With it, improvement becomes structured, intentional, and sustainable. At this stage, the practice becomes about integration, not about adding something new. The goal is to use everything you trained as one continuous process. When your trading session ends, the first step is to pause before diving into results. You create a brief space to observe your internal state. Notice how you feel mentally and emotionally. Calm, frustrated, relieved, tired, or overstimulated. This moment anchors awareness and prevents the session from ending without being processed. This pause is not isolated from the rest of the framework. It connects directly to how you prepared before the session and how you managed yourself during execution. The way a session ends often reveals how well impulses were interrupted, emotions were calibrated, and resets were applied throughout the day. From there, attention shifts to execution rather than outcome. You reflect on how you behaved, not on whether you won or lost. You check if your rules were respected, if hesitation appeared, if trades were forced, or if exits were rushed. This step reinforces the idea that consistency is built through behavior, not short-term results. As this reflection becomes part of your routine, patterns naturally start to surface. Certain emotional states begin to align with specific behaviors. Impatience may follow losses. Overconfidence may follow wins. These patterns are not weaknesses. They are signals. Once identified, they give you clarity on what truly needs adjustment. To keep the framework practical, the exercise remains simple. At the end of each session, record one emotional observation and one behavioral observation. Then define one small focus for the next session. Not a full reset, just a single point of attention. This step closes the loop, allowing each session to build on the previous one and turning experience into structured, measurable progress. As we close this course, it is important to understand where this practice truly belongs in your development as a trader. Everything you trained here connects into a single framework. Awareness allows you to recognize what is happening. Regulation helps you respond instead of react. Journaling preserves what you experience. Feedback loops transform that information into improvement. Together, these elements turn trading from a reactive activity into a deliberate process of growth. By carrying this framework into every session, learning no longer depends on chance. Patterns become visible. Repeated mistakes lose their power. Experience stops being wasted and starts compounding. Progress is no longer tied to isolated outcomes, but to how consistently you apply the process you have built. From this point forward, the responsibility shifts to you. You are no longer relying on motivation, emotion, or hope to improve. You now have a complete system to prepare, execute, review, and evolve. This framework is not something you finish. It is something you carry into every session, shaping your decisions, your discipline, and your long-term consistency as a trader. Please also remember that the mission of the ComLucro channel is simple. We focus on giving traders clarity, confidence, and structure, so market decisions are made with discipline and intention. On this channel, you will find complete courses built as a true trading masterclass. We teach market structure, higher time frame trading, and supply and demand, always focused on understanding price behavior and executing with a professional mindset. We also go deep into trading psychology, risk management, and consistency, because trading is not just about charts. It is about mindset, discipline, and structured execution over time. There are no shortcuts. Real progress comes from continuous learning and practice. Our main courses include Smart Money Concepts, Technical Analysis for Day Traders, Trading Psychology, and the Wyckoff Method course. Alongside our courses, we share lessons and insights from some of the most respected names in trading, including professionals like David Paul, Alexander Elder, Tom Hugard, Mark Douglas, Al Brooks, and Larry Williams, whose experience has shaped how traders understand markets today. So, if this video helped you gain more clarity, leave a like. It helps this content reach other traders who are on the same journey. Make sure to subscribe and turn on notifications so you don't miss our latest lessons and insights. Now, I would really like to hear from you. Which concept in this video made the biggest difference for you? What topic would you like us to cover next? Leave a comment below and let us know. If you want to go deeper with exclusive content, early access to videos, and additional tools to support your development, consider joining the ComLucro Trader community right here on YouTube. It is a simple way to support the channel and a smart investment in your own growth as a trader. Thanks for watching, and I will see you in the next video.